Bitcoin dips under key $20,000 edge. If it's not too much trouble, utilize the sharing apparatuses found through the offer button at the top or side of articles. Duplicating articles to impart to others is a break of ft.com T&Cs and copyright policy. Email licensing at ft.com to purchase extra privileges. Supporters might share up to 10 or 20 articles each month utilizing the gift article administration. More data can be found at https://www.ft.com/visit. https://www.ft.com/content/975A7745A774-D817-4D3B-A2B2-6BB22C3D59B. Bitcoin's cost has broken beneath the vital edge of $20,000 interestingly since November 2020, gambling setting off a new flood of selling and extending the emergency grasping the computerized resource area. The biggest digital currency, which goes about as a benchmark for the more extensive crypto market, plunged to under $18,000 on Saturday, a fall of around 14%, prior to quickly returning somewhat. That took it beneath the pinnacle level of the past bull run in crypto markets in 2017 and deleted long stretches of gains for long-haul holders. Customary monetary business sectors were shaken for this present week after a threesome of huge national banks, drove by the U.S. Federal Reserve, helped getting costs as a component of a work to pack down serious expansion. Worldwide values posted their most obviously terrible week since the haziest days of the pandemic in March 2020 as brokers worried that the forceful activity could growl worldwide development or much trigger a downturn. The crypto market has supported especially intense strain as the race for returns incited by the enormous upgrade endeavors of national banks and states at the level of the pandemic suddenly moves into invert. Financial backers and chiefs have been tensely watching the cost of Bitcoin as of late, dreading a dip under $20,000 may provoke constrained liquidations of enormous utilized wagers in the business sectors, coming down on the cost and deteriorating the credit crunch that has previously struck huge crypto banks and dealers. If it's not too much trouble, utilize the sharing devices found by means of the offer button at the top or side of articles. Replicating articles to impart to others is a break of ft.com T&Cs and copyright policy. Email licensing at ft.com to purchase extra freedoms. Supporters might share up to 10 or 20 articles each month utilizing the gift article administration. More data can be found at https://www.ft.com/visit. https://www.ft.com/content/975A7747-D817-4D3B-A2B2-6BB22C3D59B. Somewhat recently, Celsius and Babel Financial, a couple of crypto loaning organizations, impeded withdrawals while Three Arrows neglected to satisfy needs from banks to stump up additional assets to cover soured wagers. Last month, Luna and Land, two tokens that were well known with crypto merchants looking for ultra-exceptional returns, fell. The dominoes are falling now, said Connor Ryder, examiner at examination and information supplier Keiko on Friday. With more dominoes likely comes more descending cost activity, which will presumably see a snowball with these liquidations. Bitcoin has shed more than 70% of its worth since its pinnacle last harvest time as financial backers escape more speculative resources with the fixing of money-related strategy all over the planet by national banks. Complete crypto market esteem has dipped under $1 trillion from a pinnacle of $3.2 trillion. The cost of Ether has additionally plunged underneath $1,000, taking its downfalls this year to more than 70%. The Bitcoin value dropped to around $17,600 at one point on Saturday, as per information from Crypto Compare, prior to bouncing back to float just shy of $20,000. More modest moneylenders have likewise decreased or stopped withdrawals, while Toronto recorded crypto stage Voyager on Friday inked an arrangement to get more than $200 million from exchanging firm Alameda. The present activities give Voyager greater adaptability to relieve current economic situations, said Stephen Ehrlich, CEO. The credit offices may be utilized by Voyager if necessary to shield client resources, he added. Ryder anticipates that the further drop in business sectors should come down on different banks and merchants. On the off chance that we get one more leg down, it will get pretty clear. Before long, who was simply holding on with a death grip, he said.